All right, I'm here at tradingview.com right now, and I'm looking at the US dollar index. Before I go forward, number one, I did a video last week where I said that, hey, it the title was Dollar Bull Gold Bear, right? Probably going to name this Gold Bull Dollar Bears. And once again, this is these are just my thought processes, what's going to happen or potential scenarios. So once again, don't invest based on what I'm saying. Do invest based on your own due diligence, though, if you choose to invest. Okay, so I'm looking at this dollar index. If you look at it from 2009, right, you saw many individuals saying that, hey, you know what, dollar could go below 70, and the next step after 70 could be 40, 20, hyperinflation, right? It caught many people off guard like a shift. And then we saw it rally to 89 roughly in 2009, right? Market lows. Now, fast forward to 2011, we saw another low, right? It wasn't as low as this over here, where you saw a low of like 70-ish, right? This was approximately 72.9-ish, right? Don't have the exact data, but around there. And then we've seen the dollar index appreciate, right? People have been proclaiming that, hey, look, the dollar index is doing well. Okay, that's an interesting point. So a lot of people are thinking that we have more room to the upside in the dollar. We shall see. Now, let's look at some other currency markets to explain why the dollar went up. Alright, this is a dollar yen chart that I made myself, and first of all, if you look at the dollar index, it's a basket of fiat-based currencies. And if you look at the composition of the dollar index, roughly 10% or so composes of the yen, okay? So if you look at this over here, the yen, dollar yen was 76, and then it went to 110. So that means that the Japanese currency depreciated against the US dollar index. But if you want to do the math, we could do it right now. 110 minus 76, right? And divided by 76. So approximately the yen depreciated against the US dollar 44%. So keep that in mind. We have a currency, the yen, that composes 10%, 10 or 11% around there of the US dollar index. And this currency, first of all, depreciated 44%. So that's the number one thing. Number two thing, let's look at the euro, okay? And let me just format it a little better so you can see it. Okay, so this is the euro index if it goes back a few years. So if you want to look at it over here, the euro was strong in 2011, hence dollar weakness. If you look at the euro, it is a huge part of the US dollar index. Many people don't know this, and consists approximately 55 or maybe a little higher than that, 57, 58% of the US dollar index. So if you see a depreciation in the euro, right? Let's do the math, okay? So this was 1.48. And over here right now, it's saying like it's 1.25. So 1.48 minus 1.25 divided by 1.48. Okay, so that's a 16% move to the downside for the euro. Well, the dollar appreciated 16%. And you have to remember, this is more than 50% of the US dollar index. So put this into perspective. The dollar index rose all the way to 86 or so, right? As you can see over here. And the Japanese yen also, it depreciated against the US dollar 44%. So if you look at the moves, those two currencies in my mind had a significant move in the US dollar index. So now a lot of people are saying that, hey, gold's going to go to 1,000 or it's 800, 900. It sure can. I'm not doubting that. But I'm just looking at it from another perspective now. I felt that the dollar index, the way that the Federal Reserve is acting right now, I don't see it going higher than 89 unless we have a significant blow up in Europe or Japan in the next few years, which I have said that, hey, I wouldn't be surprised that we could have a blow up. So putting all this into perspective, 89.90, The Federal Reserve doesn't like it, in my opinion, the way that I'm looking at these graphs for the past 6 years. So if the Fed doesn't like 89, what do I think they're going to do? They're going to probably engage in some sort of currency transaction, currency swap transaction, where they would make the dollar go down, probably via the euro or probably via the yen, right? Those are the two currencies that I believe that are powerful when it comes to determining the market value or the phony market value of the US dollar. But now I want to look at gold. So before I do go on to gold though, the thing is that the last 3 years, right? Dollar index 72, 89, you've seen a reduction in the price of gold, right? I felt that it was not correlated, but you could see the moves going hand in hand with the Japanese yen. There's also other reasons why gold went down, in my opinion, but we could just look at it right now. Right, I made this triple bottom gold chart the other day, and I noticed that 1180, 1180, 1180, around that range, where we've seen the bottoming out process, right? We shall see whether this is a true triple bottom as well. So some gold bulls are saying that, hey, look, bottom out 3 times, this is great news to the upside, right? Some people are saying that, hey, guess what, the dollar is going to strengthen in the next few years, there's no reason to touch gold at this moment, okay? So a lot of people are still debating, hey, gold going to go up, going to go down. A lot of people who are in the stock market, they don't like gold, okay? We know that for sure. So putting all of this aside, what else can we look at? I mean, I showed you that a lot of people think that the dollar is going to go up. And there's a school of thought saying that, hey, you know what? This move that went up, it may blind a lot of people, even sophisticated investors, that, hey, the dollar may actually go down. A lot of people are not thinking that the dollar is going to go down. A lot of people, whether it's the mainstream media, alternative media, etc. Even I saw Jim Rogers saying that the dollar is going to go up next year, right? Or that's what he felt, based on what's going on in the currency markets. But he's a trader once again. But let's look at another chart that is telling me maybe something different could happen. Alright, so over here I plotted since 2011. You could take the gold price and you could divide that by the S&P, right? So if you just look at it right over here, some individuals in that trade may indicate that this is a bullish falling wedge pattern, okay? So if those traders are right, saying that this is truly a bullish falling wedge pattern, and the probability is that we may see the gold price go up. So what would happen with this ratio? It would go up, right? Because the thing is that, once again, I took the gold price, which is, I don't know, 1200, divide that by the S&P, right, which is close to 1900-ish, right? And it's actually went down with this market correction, and you saw this move up in the ratio. So gold prices, held steady at around $1,240 an ounce, right, for the past month. And if we see S&P go down, who knows? Will this mean that this is a bullish pattern? We shall see. I mean, the pattern is definitely forming here. But once again, just because a pattern forms doesn't mean that it's going to occur. We're just looking at probabilities now. So this is an interesting take. I really don't see it. I've seen it on some trading sites. We shall see whether this holds true. I want your guys' opinion, especially traders. What do you think is going to happen? I mean, looks like a lot of people still don't like gold. They don't like silver. A lot of people have been shooken up in the stock market. And what I noticed in the last few weeks, Charles Nenner and his gang, not his gang, but his team, they're saying that, hey, I want to buy gold and silver if it's above 1225. I heard in an interview, and I don't want to touch the S&P or the Dow. That's what he said, okay? So I don't know what he's looking at. Is he looking at something like this? Who knows? This chart is telling me that the probability is gold and silver going to go high, but higher from where they are right now. We shall see whether that's true. But anyways, guys, a lot of people are bullish on the dollar, bearish on gold. What if the opposite happens? where the dollar actually falls and gold prices appreciate. It's something to note, and that's why I'm going to change the title from last week to Gold Bulls, Dollar Bears. Thanks for listening, guys. Talk to you later. Bye.